In this video, I'm going to give you the top 5 ways to spend your tax return in 2021. Hello everybody and welcome back to Dev Money. By the end of this video, instead of taking that tax refund, going on some crazy vacation, buying a new car, new watch, whatever it might be, you'll have some great tools so that way you can actually invest in your future and better your life long term. With the tax filing deadline quickly approaching on April 17th, many Americans can expect to be receiving their much anticipated tax refund. Most people, and this might be you, have grand plans of how they're going to spend that tax refund before it even hits their bank account. So whether you're one of those people or not, this video is going to give you 5 great strategies on how to spend that tax refund. Whether you fall into that category or not, this video will give you the best ways to spend your tax refund. So make sure to stick around for the entire video to get all 5 tips. But first, what is a tax refund anyway, and why do we get it? Well, thankfully, the very name describes what it is. It's a tax return or refund. Simply put, when you pay the government more taxes than you actually owe throughout the year, you get those overpaid taxes returned to you in the form of a tax return at a whopping 0% interest. So much for crazy high returns fueled by rocket and diamond emojis, right? Now, how exactly does this happen? How do you pay too much taxes to the government? It all starts with a wonderful form that the IRS has created called the W-4. You'll typically fill this out when you start a new job and then never think about it again, because who really wants to be filling out government paperwork? And if the last time you filled out a W-4 was prior to 2020, you probably remember going through having to answer a series of questions and putting a number in the blank based upon the answer to that question. Well, that number represents the total amount of deductions or withholdings that you'll be claiming, and the higher that number, the less amount of taxes will be withheld from each of your paychecks. The IRS updated the W-4 in 2020, and they did that to make it a bit easier to understand and to fill out. Instead of putting a number down to represent the amount of deductions withheld, they actually have you do a little bit of math to calculate the dollar amount you want withheld from each of your paychecks. You can also use the irs.gov website, and they have a calculator to help you figure out how to best fill out this form and what numbers you need to be putting on there. So simply put, if you're having the government withhold too many taxes from your paycheck, you'll be getting that tax refund at the end of the tax year, which is around April. Again, with a whopping 0% interest. How grand. And on the opposite side, if you don't have them withhold enough taxes, at the end of the year, you're actually gonna owe some taxes and you'll have to write them a check. And if you calculate everything just right and you're just Mr. Perfection, you won't get a return or a bill. Amazing, right? Now, that's rarely gonna happen, but in some cases it might. My perspective is this: don't lend the government your hard-earned money interest-free, because all they're gonna be doing is using your money and they won't even be paying you for that privilege. If you're getting a really big tax return this year, your goal should be to not get one or to get less of one next year. And you can do that by just speaking to your HR department at your job and adjusting the deductions on your W-4. You're far better off getting some extra money on each of your paychecks and then taking that money, putting it into a high yield savings account so you're at least getting some interest instead of just giving it to the government for free. Now that we've established what a tax return is, and since you're probably getting one since you're watching this, let's talk about how to spend it. The average tax return in 2020 was a whopping $2,707. Cha-ching. Now, that number can vary by a very wide margin based upon how many dependents you have, like children, other people that you're in charge of caring for and providing for, as well as what your income is and just your personal financial situation. But for our purposes in this video, let's just assume you're gonna get back about $3,000. Regardless of whether you're getting more or less than that $3,000, each of these tips will still apply to you. So number 1, the first thing you're gonna wanna do with that $3,000 is pay off some debt, especially if you have some really high interest debt, such as credit cards, personal loans, things of that nature. Amazingly, 7 out of 10 Americans are living paycheck to paycheck, and while that may be the norm, it does not need to apply to you. One of the best ways to take control of your financial health in your life is to stop owing people money. Look at your total debts and make a plan to systematically eliminate them one by one. While I don't agree with everything he says, Dave Ramsey has some really great resources to help you get out of debt, and I'll leave a link down below for his website, and you can go read some of his books, listen to some of the things he says. It's really good. Now, if the only debt that you have is your mortgage on your home, I wouldn't necessarily say to just go throw that $3,000 on your mortgage, but if it makes you feel better, it's also not a bad choice. I just think there's some better ways that you could spend that money, especially if you have a really low interest mortgage. I would focus on paying off your credit cards, any personal loans, and really just consumer debt. Getting out of debt and having the full amount of your paycheck available to you each month will be one of the best things you can do to start building financial wealth. And number 2, you're gonna wanna create some sort of an emergency fund or a savings account that you can fall back on in case of an emergency. An article by Bankrate found that less than 4 out of 10 Americans can readily pay for a $1,000 unexpected expense. Could you handle a $1,000 unexpected expense? If not, this is a great way to use that tax return. So really what you'll be doing is just creating a savings account. Put that $1,000 in there, more if you'd like, and just leave it there, forget about it, don't touch it. You don't wanna get in the habit of dipping into that emergency fund unless it's an actual emergency, with emphasis on actual. Tickets to see Ariana Grande, getting a new exhaust on your car, pre-ordering a PS5, or gambling with GameStop stock are all not examples of true emergencies. I'm 95% certain each of you watching this knows what an actual emergency is like. Be mature, be responsible, and take your financial health seriously. The quickest way back into consumer debt, like credit cards, is by not having extra funds available when your car breaks down and you gotta go get it fixed so you can get to your job on time and keep that paycheck coming. Number 3, and this is a fun one. I love this one, and that is invest in real estate. Now you can do this in a couple of different ways and it will pay off massively in the long run. Real estate is one of the best ways throughout all time that people have built long-term and indestructible wealth. I 100% recommend that you get started investing in real estate sooner rather than later. Now I know $3,000 won't buy much real estate, but it can be a start or an extra boost towards a savings account devoted towards the down payment on a house. You're gonna need about 3% for a down payment on a house and another 2% of the value of the house for closing costs, loan fees, things like that. That comes to a total of 5% that you're gonna need up front to buy a property. And with the national average home costing $295,000, you're gonna need $14,765 to get into your first home. That may seem like a lot of money or it may seem like chunk change depending on your situation, but wherever you're at, start somewhere and get into the mindset of buying real estate. If you already own a home, great. Start saving for an investment property so you can start making some passive income. If you don't want to deal with renters, you can always just buy a property that needs to be fixed up, fix it up, and then sell it for a profit. You can also use your tax return to invest in strategic home renovations. Now I say that because not every home renovation is really going to boost the value of your property, and some may even detract from it. For example, if you put a slide from the upstairs level down to the kitchen table and the downstairs floor, that might be really cool and your kids may love it, but you're probably going to have a hard time finding a seller that really wants that same thing. And because not many people want to slide in their house, I doubt that you're going to get the money back from that investment. Instead, focus on things that a new buyer coming into your home is really going to value. For example, kitchen renovations, bathroom renovations, renovations in the master bedroom all do wonders for your property value because those are the things people just love. New kitchens, new bathrooms, great master bedrooms, they love those. And you're definitely gonna get the most bang for your buck by doing those things rather than installing crazy slides and other stuff like that. And number 4, this may be slightly boring to you depending on your personality type, but it's very, very essential. Make sure that you're investing money for your retirement. This can be through your 401k with your job, your personal Roth IRA or other brokerage account. And once you have that investment vehicle set up, you can then decide what you're actually going to invest in. You can go with index funds, you can go with mutual funds, you can go with bonds, treasury notes, individual stocks. There's so many different options. Just make sure that you understand at least the basics of what you're investing in. Don't just put your money all into something just because your friend said to. Make sure you know what you're doing, you understand it, and have some faith in what you're investing in. Also, one of the most powerful things is just to be consistent. Ideally, if you take some of your tax return money and put it into your investment account, you're going to want to continue to do that consistently on a weekly, monthly, or yearly basis, because Albert Einstein said that the 8th wonder of the world is compound interest, aka it's powerful. If you use compound interest to your advantage, it will reward you big time. So get that compound interest working for you. If you're not sure where to start, leave me a comment down below and I'll make sure to address them in a video. Number 5, the 5th, the final, and maybe arguably the most fun one. Use your tax return, or at least a portion of it, to invest in more of a speculative fashion. Now, what do I mean by that? Well, put simply, just take a little bit of risk with your money. Never more risk than you're comfortable with, and never something that you don't understand, but consider putting some of your money into something like a cryptocurrency, like Bitcoin or Ethereum, or buying some NFTs. The cryptocurrency and NFT market is booming, but it's also highly volatile. It can potentially be very rewarding to put some of your money into cryptocurrency. However, just don't go all in without understanding at least the fundamentals. If you'd like to know more about crypto and NFTs, let me know in the comments down below and I'll address that in a future video as well. And if crypto isn't your thing, no worries. You can also take some of this money to invest in a new startup business, something that you're starting, your friend is starting, or maybe you're starting together. Get into something that you've always wanted to try out, and you can use those tax return funds to jumpstart it. You can also just use this money to educate yourself some more so that that you can have a higher earning potential in the future. Starting a new business is risky and oftentimes they fail, but it can also be very rewarding, and I doubt that you're gonna regret going for it. If there's something you've always wanted to try and you never go for it, you'll probably look back on your life and wish you would have given it a go. Well guys, thanks for sticking around to the end. I hope you're gonna take action on at least one of those 5 ideas. If you saw some value, consider subscribing and let me know in a comment down below how you're gonna spend your tax return. See you in the next one.